What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our broad market. We'll cover SPY the Qs and IWM today. On the left-hand side, as always, we've got the daily time frame, and on the right-hand side, the 30-minute intraday time frame. From the daily perspective, starting things off with our S&P 500, what do we have here? On a bar-by-bar sort of count, we do have a higher high and a higher low, keeping us in a bull sort of mode here, just getting some digestion sideways through time as opposed to lower through price. So to me, this is the most optimal, this is the most bullish form of price digestion after we've experienced a fairly expansive move from the lows up to these most recent highs. As of right now, even if this does pull back, there's still a high likelihood that we put in some sort of higher low. The first place we're looking for is right here, 441, to then do something like this. That's still, well within the bounds of a bull flag consolidation. Anything underneath that, 437 would be the next level to really pay attention to. What else can we learn about the price action here? Well, if we continue to the upside, we are looking to target this double top from right around in here. So again, nothing about this is bearish. Everything here is bullish. However, I would just caution you that now is not necessarily the best time for new longs inside of the S&P 500. I don't really think that this consolidation sideways through time has been long enough for this to eliminate and take some of the froth out of the market to the upside. So don't chase it up here. I would wait for more consolidation sideways through time, probably looking at least 4 or 5 bars here going sideways, maybe slightly lower, something that does this over time, right? And then eventually after we've built out a bull flag, again, I don't know exactly how long it would take, but just what we've seen here, it doesn't strike me as being long enough. Personally, it's my own preference. So a little bit longer, maybe another day, 2, 3, 4, and then boom, we break the highs. That puts a much cleaner bull flag into place here and more tradable in my estimation, noting that, again, we've digested some of the move. The sellers had their chance multiple times to potentially take it lower, and it didn't materialize, right? Speaking of the sellers failing to materialize, let's take a look at the 30-minute intraday time frame and just build the case that there are no stronger sellers in this marketplace still. If we look at the opening 15-minute bar, right, we were talking about the breakout, right, of the opening range in the Discord this morning. There were multiple look above and fails, right, back into the range. But what never happened? The sellers never took it to the target of that particular setup, which would have been the low of the balance, aka the low of day. And then from there, because we would have been underneath the close, maybe it sets up a bearish day. That never happened, even though we had multiple look above and fails on that first 15-minute opening range. You can see upper wick 1, upper wick 2, but what happens into the afternoon, right? Look at this. The pullback holds those wicks perfectly, and we obviously run. So stronger sellers just simply are not here inside of this S&P marketplace still, and I would not be trying to fight that and try to short it, right? I would not try to fight the longs who are obviously in control by the lack of a stronger seller and trying to short in the face of this move that we've been seeing so far. Hopefully that made sense. Again, it just doesn't make sense. Although it's not necessarily an obvious long to the upside based on risk-reward profiles, I don't think it's also a short opportunity. If you're not long from anywhere like up in here, I wouldn't be chasing it. I would wait for the better trade to develop and essentially adjust our risk reward accordingly. So that's what we've got in our S&P 500. Let's continue along and talk about the QQQ for our Nasdaq 100. What's going on this daily time frame chart here? You can clearly see that we are breaking above the 2-day balance highs, a bullish indication. Our next level is really the double top that we want to be paying attention to up here, roughly around 369, daily 200 SMA, the green line on our charts. That's what we're aiming for. Again, is it really an ideal place to start chasing this to the long side? I would say not really. If you were long from the low end of the balance that we put in, so if you were able to recognize, that we were supporting here on the Wednesday session at the lows, and you were able to pick this up either on today's open or, at the close of the Wednesday session, that's fine, right? You have the break and retest sort of trade, but I wouldn't be chasing it up and over now these highs. On a 30-minute time frame chart, I would want to see some sort of break and retest, right? Exactly what we have back here, break and retest, just happen on this level now. So 357.70, the multi-day highs that we were discussing as weak in the pre-market live stream that we discussed this morning over on the main channel, right? So that level was discussed. It's now been broken and repaired. So we're watching to see, can we hold that on a pullback and then do something like that for a clean higher low on your 30-minute time frame. If not, and we get something that does this, then it's the opposite of what we just discussed in the S&P 500. That's a look above and fail. We should target the bottom end of the range once again at 352. But I'll echo the same exact sentiments here. Wouldn't appear that a stronger seller exists in our QQQ, especially noting that our pullback day from Wednesday never even took out the low of the Tuesday session. It was still well above the double top from right around here, around 352. So again, I just don't see the reason to be shorting any of these names if we get the look above and fail, something that does do this, then again, it's just a quick short scalp. You're not overstaying your welcome to the downside. You're not looking for, a pullback that's going to come down to 335, right? That would be way out of line based on the momentum that we're seeing here in this marketplace. So hopefully that was a quick and easy rundown of our QQQ. Let's round it out with the IWM, there we go, for our Russell 2000 and the small caps. What do we see here? Pretty promising day as well, noting that we actually took out more significantly the low of yesterday's session. We fell back down underneath 204, right? The low end of this consolidation as well. And then we now have closed back inside of this range. So on the same sort of topic, we have a look below and fail technically. We should be targeting the top end of the range at 208 here in our IWM. That will keep the bull flag right here in place. So something that continues to do this. Boom, breakouts of 208, which we also know is the important weekly level. It's also the highs from right around in here that rejected. Breaks of that should take us to 212, and that does put the marketplace in more of a risk-on type position, noting that we're getting back into that weekly overhead range. So to me, I like what's happening in the IWM. Remember that in the SPY, we were saying that, it didn't really feel like a long enough period of consolidation. This to me feels long enough. So how many days is that? 1, 2, 3, 4, 5 days of consolidation in this flag. To me, this would seem ready, where if it does come up to the top, maybe there's some sort of breakout that could be had in your IWM. Like this consolidation through time strikes me as solid digestion of this overall move, just to give you a little bit more context as to what I was talking about on our S&P 500 itself. On the intraday 30-minute time frame, what else can we see here? Again, on the move lower, no acceptance underneath that level, immediately back above. We spend some time consolidating, a little bit of an inverted head and shoulders pattern, if you will. We crack the neckline into the afternoon, and I do think that the next target should be your 208 based on what we're seeing here. I wouldn't expect it to just rocket ship there, noting that there is a lot of value that's been built out in here. There's a lot of positions that are stacked up. You can see that right around in this area. Let's call that 206.50, roughly 206.25. I would imagine maybe there's a little bit of a hang up here, noting that there's likely a high volume node. I'm not going to put the volume profile on, but I would imagine that there's something here. I mean, look at all the time that was spent. It was the open, it was this low, it was this high, it was this high as well. So maybe use that as an intermediate pivot. Again, that's 206.50. Watch that to the upside, but over the course of time, I do think that 208, the top of the range, will be in play. To the downside, you're not interested in this long breakout. Obviously, if we crack 204 once again, noting that that could be coming off of a lower high, so something that's continuously doing something like this, stair-stepping to the downside, cracking that once again. Now that we've already done it once, you don't want to do it a second time, especially off of a cleaner lower high. That would be the more bearish play, right? So back down underneath 204, probably, I wouldn't look for shorts, noting that we have support right around 201. We also have this to contend with, but it just wouldn't be as optimally bullish, I suppose, is what I'm getting at here in the IWM. So that's going to round out our broad market. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.